Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the Aussie versus US dollar after the RBA decision. The Reserve Bank of Australia did keep rates unchanged at 4.35. That was as expected. What was also expected was more of a hawkish slant, similar to what the Reserve Bank of New Zealand did last week, but instead it was thought to be a little bit more dovish, and that helped to send the Aussie versus US dollar to the downside in trading here today. That move to the downside took the price below. It's a 200-hour moving average. That's a green line in this chart right here, and you can see how the price action then found resistance against a level before moving lower. We also moved below the 200-day moving average. That's a step line right through here. And in trading last week, the price moved below that 200-day moving average briefly, tested this trend line down through here, and then rebounded back to the upside. The price yesterday came down to the 200-hour moving average and the trend line right through here before moving off that level and waiting for the interest rate decision, breaking below both those levels, breaking below the 200-day moving average. Was more bearish, although the price action did trade above and below the 200-day moving average here as the price stalled with the low price from last week sort of holding support right through here before ultimately leading to the downside over the last few hours of trading. So where do we go? Well, we went to the 38.2% retracement of the move up from this low going back to November. I guess that's the November low to the 38.2% retracement, as most people know. When I see a trend-like move like this, I want to see if the sellers are to take more control. They need to get below that 38.2% retracement and stay below that level. That level currently comes in at 0.65556. And as you can see, the last 3 hours of trading have seen the price find support against that level, but it's not really running away. We would have to get back above the low price from last week's trading. That low price, by the way, came in at 0.6571. So it would take a move back above that level and probably back above the 200-day moving average to increase the bullish bias, to give the dip buyers against the 38.2% retracement some hope that the base is in, that the price could not get below that 38.2% retracement, and the bullish run is likely to continue with the move back up toward the 200-hour moving average. So watching this 38.2% retracement in the short term right now, sellers want to see the price move below that level and continue the momentum down toward this swing area with 0.65229, and also the 50% retracement of the same move up from the November low to the high price that we saw in trading yesterday. That level comes in at 0.6514, and also the low of this swing area down to 0.6500. So the 6500 to 0.65229 would be the next key target area on a break of the 0.6555 38.2% retracement. Make sense? I hope so. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.